For something that can have such a huge impact on your life, it's crazy to me that health insurance is so confusing. I mean, there's a bunch of new terminology for you to learn, and you're usually on a pretty tight deadline to make choices that'll impact you for the rest of the year. But look, whether you like it or not, if you live in the United States, you're gonna want health insurance, because even healthy individuals can end up in serious accidents that rack up tens or even hundreds of thousands of dollars in medical bills. So in this video, I'm going to help you understand how health insurance works and how to choose the right plan for you. First, let's talk about how health insurance works. Like most other types of insurance, how it works is that you pay a monthly fee to the insurance company, and in return, the insurance company will help you cover medical costs that you incur. Oftentimes, the amount that the insurance company ends up paying for your medical costs is less than how much you ended up paying them for insurance in the first place. But if you do end up getting really sick or injured and you have a lot of medical costs from it, the amount that the insurance company helps you pay could end up saving you a ton of money, especially compared to if you didn't have insurance. Basically, what you're doing is paying a monthly fee to protect you from the risk of having large medical costs in the future. So with that, let's talk about where you actually get health insurance. Most people get their insurance from their job, the healthcare.gov website, or the healthcare.gov website. Starting with coverage from your job, your employer might offer you health insurance as a benefit for working there. What this means is that your employer has partnered with health insurance companies to provide you with healthcare options. Although you don't have to use the health insurance provided by your employer, it usually is the best option because your employer has negotiated with the insurance providers to get you better pricing, and the company is also usually paying a portion of your health insurance costs as well. So if you can get health insurance from your job, it's usually a safe choice to pick one of those options. Otherwise, there's Medicare, which is a government-run program to provide health insurance to people aged 65 and older. If you're eligible, this is a great option, and you can learn more at medicare.gov. Then there's healthcare.gov, which is another government-run website that acts as a one-stop shop to help you get health insurance. Here you can find out if you're eligible for Medicaid, which is a more affordable health insurance plan for households with lower income or certain disabilities. Healthcare.gov is also where you access the health insurance marketplace that was created by the Affordable Care Act. Like the name suggests, the health insurance marketplace is just a site that shows you a whole bunch of different health insurance options for you to choose from. So if you aren't getting your insurance from your employer or through Medicare, just save yourself the trouble and go to healthcare.gov. From there, you can create an account and it'll show you all the health insurance options available to you. One quick thing to note is that some states run their own health insurance marketplace, and if you live in a state that has its own marketplace, then you can still go to healthcare.gov, but the site will redirect you to your state's website. Either way, you can just continue the sign-up process on that website that it redirects you to, and everything should be good from there. Once you figure out where to get your insurance from, you'll probably be presented with a few different plan types to choose from. The four most common types to choose from are HMO, EPO, POS, and PPO. What these acronyms stand for is honestly not important. What is important to know is if your plan requires you to stay in-network, and if your plan requires you to have a referral to see a specialist. So what do I mean by that? Well, being in-network simply means that your doctor, hospital, or whatever healthcare provider you're at is willing to accept your health insurance. In practice, what this means is that if you choose a plan that requires you to be in-network, you'll only be able to see certain doctors and healthcare providers, so your options may be limited. And if you have a favorite doctor that you really want to see, you need to make sure that they're within the network. Some plan types also require you to have a referral to see a specialist. What this means is that if you want to see a specialist, you first have to go to your doctor and have them recommend the specialist for you. While it is kind of nice to not have to worry about figuring out who to see, most people do consider it a major drawback to not be able to choose your own specialist. So, going back to the four plan types. First, there's HMO, which is usually the cheapest option, but also the most restrictive. With an HMO plan, you do need to stay in-network, and to see a specialist, you will need a referral from your primary doctor. Then there's EPO, which is like an HMO in that you have to stay in-network, but you don't need a referral to see a specialist. But do keep in mind that whatever specialist you end up wanting to go to does need to be in-network, so your options may be limited if you don't have a lot of specialists in your area. Next, there's POS, which is the first plan type on this list that doesn't require you to stay in-network for the doctors and healthcare providers you see, but you do still need a referral to see a specialist. It is important to note though that even though you don't have to stay in-network with this plan, you do typically get lower costs if you do stay in-network. Lastly, there's PPO, which is the least restrictive type of plan. This plan doesn't require you to stay in-network or require you to have a referral to see a specialist, which means it gives you the most options on who you want to see. But this plan does tend to be the most expensive, and you still get lower costs by staying in-network, so you might not benefit from being able to go out-of-network anyways. Alright, so that was a lot. So just to recap, there's two things you need to ask yourself when choosing a plan type. First, do you care about having to be in-network? And second, do you care about needing a referral to see a specialist? If you're okay with staying in-network and you don't care about needing a referral to see a specialist, then you should just stick with an HMO plan. It's typically the cheapest and it fits your needs. If you're okay with staying in-network but you do want a bit more flexibility to choose your own specialist, then an EPO plan is right for you. If you don't want to have to stay in-network but you are okay with having referrals for your specialists, then POS plans are the way to go. And lastly, if you want the ultimate flexibility of not being in-network and not needing referrals to see specialists, then you should stick with a PPO plan. Now, depending on how many plan options you have to choose from, knowing your plan type may already be enough for you to decide on which plan to get. But there are still a few terms that are important to know to really understand what you're getting with your health insurance plan. Those terms are premium, deductibles, cost sharing, and out-of-pocket maximums. First, premiums. So premiums are just a fancy way of saying this is how much you'll be paying every month to be part of this health insurance plan. By paying your premium, certain preventative medical costs such as routine checkups, immunizations, and health screenings are typically covered. Then there's your deductible. The deductible is how much you have to spend each year before your insurance starts helping you cover your medical costs. For example, if you have a $100 deductible, the first $100 of medical costs every year are completely on you, and then anything after that, insurance will help you pay. Which brings us to our next term, cost sharing. Once you reach your deductible, you and your insurance provider will start sharing the healthcare costs that you incur. This may be in the form of a copayment, where you pay a fixed amount for a certain healthcare service such as a doctor's visit, and the insurance pays the rest. Or it may be in the form of coinsurance, which is where you pay a percentage of your medical costs and the insurance company pays the rest. Whether it's copays or coinsurance, you should look through the list of benefits of that plan to see what is and isn't covered by insurance. Lastly, there's out-of-pocket maximums. This is the most that you'll ever have to pay during the year. So if you have, say, a $3,000 out-of-pocket maximum, no matter how many medical bills you get charged for during the year, you'll never have to pay more than $3,000 worth, and insurance will cover the rest. So to recap, your premiums are how much you pay each month to have insurance. Then, you pay all your own medical costs until you reach your deductible, at which point you and your insurance provider will start sharing the cost of any medical expenses you incur. You do this until you've paid up to your out-of-pocket maximum. Once you hit your out-of-pocket maximum, your insurance company will pay everything else, and this all restarts every year. Now that should cover just about everything you need to know for choosing a health insurance plan, but there are two other topics that I wanted to quickly touch on, which are HSAs and COBRA. First, HSAs. So HSAs, or health savings accounts, are a type of savings account that gives you special tax benefits. Basically, you contribute pre-tax money into the account, you let the account balance grow tax-free, and then you can withdraw money from the account, also tax-free, as long as the money is used for qualified medical expenses. This makes HSAs one of the best investment account types out there because you save a lot on taxes. All you have to do is make sure that the money in the account is used for medical expenses, which, let's face it, we're all gonna have, especially as we get older. But there is a bit of a catch. You can only contribute to an HSA if you have a high deductible health plan, or HDHP. As the name implies, these health plans have very high deductibles, which means you'll end up paying quite a bit before your insurance starts kicking in. With that said, if you're a generally healthy person and you don't expect to have a lot of medical costs, having a high deductible health plan with an HSA is a great way to save and invest money for your future. Lastly, COBRA. COBRA is a requirement for your employer to continue to allow you to be under the company's health insurance plan after losing your job. But your employer is no longer expected to help cover the monthly premiums, meaning that the amount that you pay in monthly premiums will be a lot higher than what it was before. It's hard for me to just give a blanket statement on whether or not you should accept insurance through COBRA. Generally speaking, you'll find better deals by not accepting insurance through COBRA and just looking for your own insurance through the health insurance marketplace. I suppose the main reason that you would stick with insurance through COBRA is if you already paid a lot of medical costs during the year and you hit your out-of-pocket maximum, so now any future medical expenses that you expect will be fully covered by that insurance. Otherwise, you're probably better off just making the switch and starting over with new insurance for the year. Anyways, that just about covers what you need to know to choose a health plan. If you found this video helpful, please leave a like and a comment below about what you'd like to learn about next. And if you're new to this channel, subscribe for more 5-Minute Finance.